This is Robert Harper with Virginia Farm Bureau's Grain Division. Glad to bring you the Merchandiser Minute today for Friday, May the 28th, 2021, with another volatile week in the futures market. We know from watching these markets for the last 9 months, we're getting ready to be in the 9th month of this price rally that we're on. We know that volatility is present, and with the influences we have today, we know that volatility is going to stay present. When we look back over these last months, we see that volatility creates more volatility. And as we go into a new month next week, we've got to prepare ourselves for that, and we've got to prepare our marketing plans for that. Let's take a look at how the futures markets for corn, wheat, and beans finished up the week in Chicago. December corn gapped lower on the open Sunday night, had a 58-cent a bushel trading range this week and closed down 1 cent for the week at $5.45 a bushel. November soybeans also gapped lower on the open on Sunday night, had a 67-cent a bushel trading range this week to close at $13.72. That was up 12 cents. When we take a look at July wheat, again, we gapped lower at the open. We closed at $6.63, and that was down 11 cents for the week. Lots of volatility this week that kept us all interested for sure. Let's take a look at some USDA numbers that influence the trade this week. Export inspections or loadings, however we'd like to say that. We get that report on Monday. We saw as expected for corn, wheat, and soybean loadings this week. And remember how important that is. One of the things that impacted the trade so heavily this week was speculators listening to rumors that China might be canceling some old crop corn purchases. When we got to Thursday of this week and we saw the export sales report and we saw that China ended up being a net buyer of corn, that released them from those rumors, and we saw corn go limit up on Thursday on the futures board. At the same time this week, we saw corn go limit down this week on those rumors of Chinese cancellations. A trader that I appreciate this week reminded me in my own life and even in all of our lives and in watching trading, watch what people say and watch, more importantly, what people do. And that's what we're going to keep doing with our trading partners moving forward. So again, a good export inspection report this week. They're loading a lot of vessels. The bushels are leaving the country, and that's encouraging to us. One thing this week on that note, we did see Argentina's port workers that have been on strike at the port of Rosario get that strike resolved. I did look up this week and find out that almost 80% of Argentina's soybean exports leave that port, so that was a big deal, and they got that resolved this week. Hopefully they can keep that resolved. When we look at the export sales reports that came out on Thursday, we saw just fantastic numbers for pork, great numbers for beef. We saw fantastic numbers for corn, way above what the trade was expecting. And again, those numbers on Thursday fueled that 40-cent limit up move yesterday that we saw. Beans came in as expected, and we had a big long list of wheat buyers. It looks like after 7 or 8 sessions of wheat futures declining, some demand came back in, and we saw a big list of wheat purchases. And you know your list is growing, and we had Canada at the top of the list, but we also had Burma near the top of the list. So we got a lot of interest this week in our wheat, and that definitely helped prices in some regards this week. But again, July wheat closed down 11 cents on the week. Crop progress from USDA, topsoil moisture in Virginia, 77% of the soil at short to very short moisture. We're also thankful to have rain in the forecast today, tomorrow, and Sunday, and hopefully you all will get the rain that you need. Wheat came in at 88% headed. We know that our 5-year average in Virginia on wheat heading is 93%. And we actually got out this week with Cooperative Extension and took a look at a lot of wheat on our annual wheat tour. Please give Josie or me a call to talk about what we found. We'd love to discuss it with you. Back on the crop progress, the U.S. corn came in at 90% planted, 80% is the 5-year average. U.S. beans came in at 75% planted, 54% is the 5-year average. Record-breaking pace on beans going in the ground, and most speculators look at this fast planting pace and the near ideal weather, a lot of rainfall again this week in the Corn Belt, as being negative to price, because the faster the crop grows in, we know that statistically speaking, we can plant more acres. And coming into that volatile month of June that I talked about earlier, we got to prepare ourselves for these limit up, limit down type days. We're gonna really see some volatility next month around the weather and around that June 30th acre report, where we find out how many acres the USDA said that you all planted. Winter wheat conditions fell 1% for the week at 47% good to excellent. I think last year at this time we were around 53%. Another few numbers to keep your eye on. Crude oil is trading around $65 a barrel. July ethanol, $2.35 a gallon. Go back to January 1st, $1.55 a gallon. Look at that jump in ethanol. We know that's helping corn. We know the crude oil increase is helping corn. And y'all, you know it, you see it. People are driving. People are moving around again. We take a look at the July unleaded gas futures, $2.15 a gallon, and back to the beginning of the year on January 4th, $1.50. So another big move up we've watched all year in these crude oil products and derivatives. The EIA report this week, we had production down 2%. We had stocks, a good drawdown on stocks, down just over 2%, but we were still above 1 million barrels per day of ethanol production. And when we look at our stocks, we're sitting at 18.9 million barrels. Profit is back for a lot of our ethanol producers, and that's good. The US dollar made new lows this week, but we ended the week where we started. So keep your eye on that. That's what we're seeing, choppy, volatile trade. We know that volatility breeds volatility. Another move yesterday that helped with that rally, we saw reports coming out of the meetings between the United States and the Chinese trade representatives. We know we're now in the second year of the Phase 1 trade deal, and thankfully, both sides reaffirmed their commitment to our trade deal, Phase 1 trade deal. So that definitely was price positive. And again, remember, watch what people do as much, if not more, than what they say. We had big rains in the Corn Belt this week, more wet weather forecasted out there. We're hoping again for that here. It seemed like a week where we traded rumors as much as we did the facts. There are lots of influences on your price, but they're still very much the same, the fundamental influences. And we know that, as many of y'all have taught me for a long time, these markets are very emotional. They're going to stay emotional. And we're going to prepare for that. Call us to talk about how we can market right now. We don't want you feeling like you're frozen. We want to talk about marketing strategies and options that can help you. So next week, we kick off the month of June. We know we've got 90 days to determine how big this North American crop is going to be. Weather is so important. We're going to be watching flash sales announcements if they come out every morning at 9 a.m. from USDA. Weather is the feature of the market. Demand is the feature of the market. And remember, the futures are closed on Monday. They don't open again until Monday night at 8 p.m. This is Robert at Virginia Farm Bureau's Grain Division.